Hi guys, welcome back. Roy Cuzin's here. As you remember, every first Thursday of every month, we're having a special session, right? The Forex portfolio overview, where I share my portfolio in real time. All of my positions, I go through the positions, we reanalyze them, and also looking into some interesting opportunities that I have under my watch list. So it's going to be a super interesting session today because this is the first Thursday of the new month. Now, all of these sessions, I should mention, are powered by Light Forex Broker. Now, let's go ahead and dive and take a look at my positions, my open positions. All right, guys. So this is my portfolio. These are the positions I have. If you remember, I always hold 6 positions in place. And as of today, 1st of November, this is the situation. The first position I have is a Euro New Zealand dollar. This one is actually quite a new one. I entered this one only 3 days ago, and it's already making a huge profit. It's 215 pip. Now, the reason the position size is so small, only 10%, is only because I've just taken a massive profit, because this one just had the first price target, which is basically it's the secondary price target. So we're going to take a look at that, obviously. The second position I have, Canadian Swiss franc, is probably the most disappointing position in place right now. The reason is not because it's losing. It actually has a little bit of a profit right now, but the reason is I was holding it for a long time. You can see 27 days, and I was very optimistic about it. And to be honest, I'm very disappointed right now at the situation, and I have a feeling that I'm going to close out that position. We're going to take a look at that as well. The third position here is the only one that's actually losing right now. It's relatively new. It's not too old. It's also a small position right now, only 20% position size. I'm also a bit disappointed about this one, but I'm still quite hopeful about it. We're going to take a look at that. Having said that, there is a good chance I'm going to close out that position very soon. So I got 2 positions here, as you can see, the second and the third, where I'm about to replace them with 2 new positions, 2 new opportunities that I'm going to show you. I'm going to show you them too, so it's going to be really interesting. The fourth position I have, I don't know if you remember that. We had that session about a month ago, pretty much, and this was the only position that was still in the portfolio back then. You can actually go ahead and check it out, that video about a month ago, Forex portfolio overview. Now, when I showed you this position, the dollar versus the Swiss franc, it was still in the very early stages, right? So it was just about 50 pip in profit, but believe it or not, I held it ever since till now, and we're still very much in it, right? I'm still very much in it. 60% position size, which is it's pretty big. And I'm registering a staggering 450 pip right now, getting closer to the price target, getting very closer to the final destination at 101.18. We'll take a look at that as well. As my second top favorite position in place is the 5th one right here, the crude oil, which also I actually entered that one just a few days, probably 2 or 3 days after the previous session, and I'm still holding it, registering a staggering $10 profit. I was doing a lot of in and outs in that position, also in the dollar versus the Swiss franc. So I kept increasing the position, reaching a strong key level, taking massive profit, cutting like 60-70% of the position, and then waiting for either a correction to re-increase it or a breakout out of that key level yet again to re-increase it. I'm going to show you that as well. The 6th position, which I kind of like, I'm getting more and more satisfied about that position. The Aussie versus the Canadian, which only 3 days ago I've entered, and it's starting to pan out pretty nicely. But I have to say there is a major moment happening at that particular position right now as we speak. So we're going to take a look at that as well. All right, let's go ahead and reanalyze all of these positions. I'm going to take you to the live chart. All right, so you're looking at the crude oil daily chart. We're going to start with the crude oil. Like I said, this is my second top favorite position in place. Now I got in at about 74 something, right? This is about $10 right now in profit. But I had two spots where I took a big profit off the table. If you remember, I actually published a video about the crude oil about 2 weeks ago, where it was still roughly here. And the situation was that it's trading in a very wide trading range. You can actually see it all across the daily chart, right? We have the first leg, second leg, third leg, fourth leg, right? Very wide trading range. And when I saw price beginning to turn around, after failing to break above 75.08, by the way, the top key level here in my symmetric setup, let's take a look. I mean, obviously, it looks like it did break it, but this is just a daily chart. We always need to filter out noise coming from the daily chart by looking at the weekly close. That's much more important. And you can see what happened here, right? That seemingly violation, that violation we saw on the daily ended up just as a spike here. So here you filter out the noise, and you can see that price was actually failing to break above that key level, 75.08. So everything started from that very moment, and this is where I started to establish a bearish position with the intention to go all the way to 65.61. Right, 65.61, that's a big key level. That's the mid-low key level. Let's take a look at the whole setup. Now, I'm talking about the setup, I'm talking about the black setup, right, the big one. So the 65.61 right here, that was supposed to be the official price target. However, price made it so quickly downwards that right before reaching that price target, I decided to adjust it further. But like I said, I took two massive profits on two very specific key points. Take a look. The first was the 70.61. Now this one was reached very quickly. 2 days, boom, price went straight to that point, and I took out 50% of the position out. And then I waited. I knew that price is, there's a good chance it's going to go into an upside correction. I obviously didn't know how far and how deep that could be, which is why I decreased the position significantly. But then I saw price starting to move upward slightly, and then boom, breaking that 70.61, right? That was a nice breakdown. When I saw that, I basically straight got back to increasing the position again and building it up. And that's what I did. And then obviously the price target was 65.61 at a really strong move. You can see that move right here. I saw price almost reaching my price target. Now, usually I have a lot of respect to my price targets, meaning I'm going to try to keep holding the position all the way through. Sometimes, I take a different approach. I close the position even though it did not reach the price target. Now, here I didn't really close the position. I closed a significant part of it, like 60 or 70% that was. The reason was very simple. I was too close to the price target, right? It's just too close to price target, and I saw price starting to come back up. And at that point, it was just, it seemed to be not wise, not to lock in, a big portion of that position, of that profit. So I took about 60% off that position, and I saw price starting to trade sideways. I mean, sideways / upwards, slightly upwards. But I was able to pinpoint, I'm talking about this particular part, right? This was just right now, just happening in the last few days. So I was able to pinpoint, I was able to spot that what you see here, and it's not very easy to see actually, it's a lower scale trading range. And in order to see it, you need to switch to the 4-hour chart, basically to one time scale below, right? Here you can see exactly what I'm talking about. It's being represented here by the blue system, right? This blue system here. So you can see you have this sideways movement that I was able to pinpoint with my blue symmetric setup here. And what I did was when price went up to the upper section, I just increased the position yet again. After taking a big profit when it almost reached the price target, then I started to go back in. However, I used that blue system, right, that lowercase setup as a trigger to increase the position yet again, and the trigger level in this case was the bottom key level at 65.3. You can see it right here. So it was a big moment yesterday because price broke both the 65.61. I mean, it obviously reached it, right, and then it broke it, but it also broke the 65.3, the bottom key level in the lower scale setup here. So this is very good news. Now usually I aim only at the mid-low key level when I'm coming from above, right? Where price is coming from the upper section, I always settle with the mid-low key level. And vice versa. If price is coming from below, I always focus on the mid-high key level. But in this case, since I was basically analyzing the high here, right? And it's very obvious to see that the high was much higher than the previous ones, right? So basically price took the previous highs by a huge margin, both in price and time. Now why do I say this? Because usually when that happens, there is a very good chance that price will perform the same behavior on the other side. Meaning, it's going to take this, it's going to take the previous lows just as well, right? Which is why I decided to push the price target to 63.40, which is exactly where the major previous low, of course, the major previous low is. So, price at this point breaking below 65.3 and below 65.61, these two very important support levels, is a very good sign that I'm gonna be able to catch the very last stretch to 63.40, and here game is over. Game is definitely over. I would actually expect at that point for price to reverse and begin the next upside move, right? I'm not going to jump in, obviously. I'm not going to try to catch a falling knife, but I will try to look for the visible upside reversal and then probably establish a bullish position. I always like to start small and build it up as it goes my way. Alright, this is the crude oil. Let's take a look at another position that I have here in place. That would be the Canadian Swiss franc, which I told you I'm very disappointed in. And mainly because I held it for so long. I held it for so long and it looked so promising. This is part of the game, right? This is part of the game. Sometimes things are not going as expected. But here, the technical picture was really strong, very sound on the downside. Because I was focusing on, well, to be honest, the setup, the trading range here was not very well established to begin with. Okay, I have to say this. We only had here 3 legs. I mean, only that's enough, right? That's the minimum legs that require. Well, sometimes I even start with 2 legs actually. But we had 3 legs, right? And the fact of the matter was that price gave a huge respect to that mid-high key level, 76.11. We saw that. We saw that when price, take a look here, right here, it gapped above that level. It just jumped above that level and opened right here, right? That was the first kind of acknowledgement we got from price action with regards to that particular key level, 76.11. Then we saw price crossing back and closing below. Remember that? Now we're looking at a weekly bar, a weekly chart, right? A closing bar here means a lot. But then, I mean, that was just the beginning. Then take a look at what happened in the previous couple of weeks. I mean, take a look at this particular bar. It started on the upside, was very strong at the beginning, right? Basically challenging that same very level, 76.11, but then take a look how it ended the week. It went back all the way and closed below. And the following week, to my amazement, was also this, doing the same thing, basically repeating the same behavior. Starting on the upside, even stronger than the previous week, taking the previous high, right, the local previous high of the previous week, and managing to go all the way back by the end of the week to end just below that level. Now, look, usually that's a huge indication that there's going to be a downside movement. In this case, also a downside reversal. Now, I would say about 85%, 90% of the cases are ending up very well when that happens. However, right now you can see what's going on. To my surprise, I have to say, I was expecting price to go straight to the lower section here, which is exactly where my price target is. You can see 74.62, the mid-low key level. Now, I have to say this, you know, price may actually go back again, third time, right, and close below 76.11. If that happens, that would be huge. Really, that would be a very good sign, and I will continue to hold this position. However, if it's not, right, if it's going to close by the end of the week above 76.11 or take my stop loss before, whichever comes first, I would have to close this position, which at the moment is actually a bit in a bit of a profit. You know, it's a very small profit, but you know, I'm not too optimistic about it, to be honest. It's too far above 76.11 at this point. I mean, it can easily go back. We still have a few days till the end of the week, but you know, I have a feeling I'm going to have to replace this position very soon. Now, let's take a look at the third position we have here. This is the Aussie versus the Canadian, entered just a couple of days ago. Now, here the situation is really interesting. I mean, very promising. The technical picture is very promising. We're looking at, I'm taking you to the monthly chart because this is where the basic setup is coming from. And what you're looking at is a pretty well-established trading range, which presents 4 legs in place. Take a look. These are the 4 legs, right? The first, second, third, fourth. And here's the interesting part. The fourth leg, which just ended, well, this is what I'm trying to suggest here. This is what I'm trying to claim. What it did, the fourth leg, on the way down, other than the obvious thing, going from one section, top section, to the lower section, but it also took the previous low, or should I say the previous lows, because it was kind of a double bottom right here. Now, it took it by a very small margin, very, very small, this spike here, but that's enough, right? That's enough to take the previous lows and gain momentum on the upside. I love it when that happens. I love it when price takes the previous lows or the previous highs, depending on which side you're looking at it, and begin to turn around, right? So at this point, I suspect that we might be looking at a genuine upside reversal. Now, we definitely expect a fifth leg to start and build up here. And price should go back to the upper section more likely than not. The question is, are we going to have a genuine upside reversal or not? And I think that the answer is lies at this particular key level. Take a look. 94.47, which is, by the way, my secondary price target. So at that point, I'm going to take some profit off the table, right? I'm going to decrease the position significantly and wait for a breakout. If there's going to be a breakout followed by a weekly confirmation, then obviously I'll get back to increase the position again. But I want to show you something even more interesting, because right here at the bottom, where price is seemingly beginning to turn around, I actually found another element which I could use, I could take advantage of. That was a secondary setup, symmetric setup, that I was able to pinpoint the very local price action. Let's take a look at that. So I'm going to take you to the daily chart, right? So here's the move, right? The downside move ended and began to turn around. But here I found this particular trading range. Take a look. So tight, right? On the daily chart, I was able to pinpoint here with that red system. And what I did was I was looking to use that system as the trigger for the whole position, right? We saw the whole move. I mean, that was an ambitious move. Let me take you again to that big setup. So think about it. I'm talking about a move all the way to the upper section, right? The minimum level here to aim for is 10070. So we're talking about, it's about 700, 800 pip. That's pretty much the maximum distance that I'm willing to participate in. That's a classic swing trade, right? Maybe a bit too much for me, but I'm happy to take any opportunities with between 500, I should probably say 400 to and up to 800 pip. That's usually my range. So this one is definitely on the top side of my range, but this particular level, 94.47, is the main obstacle standing in the way of a genuine upside reversal, right? So I'm not only going to use that 94.47 to close most of the position, right? I'm also going to use it as the main trigger to continue and carry out that bullish position, right? Only when price can prove that it's breaking that 94.47, only then I will take it full speed all the way to a big position again. So yeah, I mean, this right now, what's happening, the very moment you're looking at this is live stuff, right? Price is breaking above the top key level. Take a look, 93.38 right here, and this was my official trigger, which is why this position is very small at the moment, because I was waiting for this to happen. Now that price is breaking above that, red system that closed on it, I think it's going to go straight to 94.47. The only question is whether this is a genuine breakout, because it's just a daily chart. Price can actually, this may actually be an excess noise, and price could go back and give us another downside leg just within the red system here before it could break upwards again. I have a feeling that this is actually a genuine breakout. We'll see. Anyway, if price is going to close above that level and continue on the way up, I may choose to increase the position just a little bit, but basically this big increase of the position will only happen once we overcome this big obstacle at 94.47. All right, let's take a look at the rest of the positions. All right, guys, so here you're looking at the dollar versus the Swiss franc, which is my top favorite position in place. Obviously, holding it for 37 days, starting at 96.15, guys. 96.15 is my entry price. And I have about 450 pip in profit. But the real interesting story here is what I've done all the way, all these 37 days, 450 pip. Because the scaling in, scaling out tactic that's actually the technique that can take 100% move and turn it into a 200%. It can help you squeeze out more out of the same move just by doing this very simple technique. This is a money management technique, basically. I'm going to show you how I did that, but let me show you the bigger picture here. This is the monthly chart. The setup. The basic setup is coming from the monthly chart. Let me enlarge a little bit so we can see exactly what we're talking about. We're talking about the black system here. Massive trading range, right? On the monthly chart, this trading range started at 2015, roughly, the middle of 2015, and it's pretty well established. We have 1, 2, 3 legs, right? The third leg took it all the way to the very bottom key level, touched base beautifully here, and reversed. Now, that moment I became very bullish on the dollar Swiss franc. However, I did not know it's going to take place in 3 segments, right? You can never know that. I mean, it started very strongly on the upside. I've made a fortune here. But I was aiming at the higher section, as I always do, at 101.18. When I saw price starting to come off, I started to kill that position. I started to close the position, and then at some point I realized that we are in a downside correction. So I got out completely because it's a monthly setup. It's too big, it's too crude to work only on the moves coming from the monthly. But as price reached the mid-low key level, 96.51, and beautifully touched base here, but was unable to break through, just left a spike, came back, I knew that the downside correction was over, and that's the time to strike again on the upside, this time going straight towards the higher section. 101.18 was, and still is, by the way, my official price target. Now, I'm going to take you closer to home, right? We're going to take you closer to price section. So I'm going to switch to the daily chart. And here's what I did. I had 2 profit-taking spots. 2 very important profit-taking spots. The first was at 98.50. Now this, the blue system you see here, this is a secondary system. It's not as important as the big one, as the black one, but I was following a secondary system here that developed on the daily chart back then, and I was aiming for the 98.50 just to take a massive profit at that point. So I took about 60 or 70% out, right? I've built up the position from 96.15. Just imagine that every single day from 96.15, roughly around here, every single day that was going my way, I just added to the position. This is what we call scaling in, right? Scaling in. So I scaled in, I've built up the position till I've reached 98.50. At 98.50, when it touched base here, I closed about 50% of the position, right? A significant portion, locking in profit. But then, because obviously my concern, once we reach an important resistance level, is a downside correction, right? Sometimes it doesn't happen, right? Price just went straight, crashed at 98.50. 98.50. Obviously, I was regretting closing out the position, but that's also part of the game. But I got back in. I started to increase the position as I saw price break in, but then I saw price basically starting to stall and starting to come off. When it started to come off, I was starting to close out the position again, basically making a huge, basically just taking more and more profit off the table. And I was waiting for price to touch base on the 98.50 because that's what usually happens once, important levels are being broken. They're usually turned into, a resistance, will turn into a support, and price will usually test that. It will try to test and see if that level really turned into a support or not. Obviously, you can see what happened. That was a beautiful, beautiful reaction we had here from price action. And as I saw that reaction, guess what? I went back straight to increasing the position again. This time I went to the second. I was looking at the next price target. I had here 3, right? The final destination at 101.18, which, by the way, it's not final. I actually extended it. But back then I had 3. I had the 101.18 as final destination and 2 secondary targets, 98.50 and 99.93. Well, the 99.93 was reached just a few days ago in a beautiful move, straight touching base on that. Take a look at that reaction we had for a couple of days, right? At first, price just, punched that level. Once it touched that level, I quickly closed about 40% of the position or 50% of the position, a significant part closed out, and then I saw price trying to break above that level again, right? But going back again and closing on the downside. Now I have to say this was pretty concerning to me, so I went in and closed more of the position. I just left a tiny part of the position at that point. I think I just left about 30% position size in place after coming off 90%, right? And the next day was just a huge move on the upside that crashed at 99.30. And you can actually see how when I saw that happening, I actually added, you see these green dotted lines, these are my actual trades. So you can actually see how I added here one, the next day I added one again, and today I added even another one again. So I have about 60% position size right now, which is decent, pretty decent size. But I'm aiming at 2 price targets, not just one. That official price target is still official. It's still officially the price target, 101.18. That's a massive, massive key level. It's actually 2 levels combined perfectly, right? It's the blue system, the top key level of the blue system, beautifully in line, really precisely in line with the mid-high key level of the black system, which makes it a big and very important resistance. So at that point, at 101.18, I plan to take out about 80% of the position, right? Leave just a tiny portion, maybe 20 or 30%, to try to catch the last stretch. Just as I've shown you earlier, when price takes the previous low, in this case, take a look. Let me show you again the big picture. You see this low here. This was the last low, right? This was the last low. And it took the previous one by a big, big margin, right? This is the monthly chart, I want to remind you. So, this is why I'm doing the same technique again. I expect price to do the same on the upside, taking the previous major high. The previous major high is at 103.40. Having said that, I have to say, this range, this part, everything from 101.18, which is a symmetric key level, it's a double key level, and all the way to the previous high is the, it's the sketchy part. It's kind of the twilight zone. It's a bit of a risky stretch, which is why I'm going to decrease the position significantly for that last stretch. We'll see how that goes. All right, another position that I have. You remember this one, the Euro Swiss. I've been talking. This is the only position that is losing right now. It's about 50 pip in negative territory. And I've entered at 113.65 here. It's still small, right? I only put up about 20% position size at the moment. Only 2 trades are in place, so the loss here is minimal right now. But here's the situation. I mean, I also thought that this should be successful. I was very hopeful about this one because it looked very good at the beginning. We're looking at this. This is the formation we're having right now. This daily chart. You can see that we had a first upside leg followed by a second leg and third leg up again, right? So we have a 3-leg trading range that was starting to form. But I really got interested because I saw that the third leg, the edge, the tip of the third leg took the previous high and began to turn around. While turning around, it was breaking below 114.02, which is the mid-high key level here. So that was a good sign. That was basically that. These are the stuff that I'm looking for on a very daily basis. These are the setups that I'm looking for. And price broke. It broke that 114.02. Things looked pretty good at the beginning. And I'm talking about this moment here, which is pretty much where I started to load this position, this bearish position. Then, of course, came what I call an attempt to challenge that 114.02 from below, which is very, typical, expected. I saw price failing once. I saw price failing twice. Failing the third time. Take a look here. Beautiful stuff. And even failing the 4th time, which was yesterday. Just yesterday. Now, all of these failures basically gave me a lot of hope about this position because it looked like price is unable to break above 114.02, and if it's unable to break above 114.02, there's only one meaning to it. It means that it will continue to move south. That's what usually happens. I have to say, right now, I have no idea how this one is going to end. Even if it's going to close the day above 114.02 here today, it still doesn't mean that it's not going to eventually not going to end up right here in the lower section, right? Which is, by the way, you can see where my price target is. This is just the first price target. Let me show you the bigger picture. Actually, it's quite interesting. Here, I'm going to show you what I did. I didn't have a big setup. Sometimes we do not have a big setup. Sometimes we don't have a big trading range, right? Coming from the weekly chart or the monthly chart. But what I did have here was a massive head and shoulders pattern. Take a look. Left shoulder, head, right shoulder, right? On a weekly chart, that speaks volumes usually. So I got interested in this one on the downside when it started to break that neckline, right? The neckline of that head. And what I really like head and shoulders patterns usually. And what I do is I measure the head. I apply a projection 1.618 Fibonacci projection level, and that's usually where I aim for. Now the 1.618 of the head is right here at 111. So when I started this particular bearish position, I set my final destination, my official price target at 111, and it's still there. But I also have a secondary target, right? A secondary price target, which is the natural mid-low key level of this particular blue system here. So like I said, I think I'm gonna have to close this position out, not because it's going to take my stop loss level. It's probably not going to reach all the way to the stop loss level. I'm probably going to close it before because it's going to break that 114.02. I'm probably going to wait to the end of the week to make sure that it's a weekly close rather than daily close. And if it's not going to be closing the weekly bar above 114.02, then I will just continue holding this bearish position. I will probably get back to increase the position and take it, try to make it a decent sized position. But right now it doesn't look very good. About 50 pip the loss here at the moment. We'll see how it goes. Last position that we have. Whoa! All right. This stuff. These stuff happening in real time. So I'm just a bit surprised to see what's going on right now. As we speak, price is breaking my a very important key level, actually, 72.47. Now, this one, I really like this one. Here's the big picture. Taking you to the weekly chart, right? Weekly chart, the big picture is always either the weekly chart or the monthly chart. Now, here we have an interesting situation where we have this trading range, right? Black system, first leg going down. This very complex structure is one leg going up, touching base on the higher section, right? Formally getting, being assigned as leg number 2, and then drop leg number 3, and all the way up leg number 4. Now, when it went up, it went so strongly up, it kind of overshooted to the upside. And it seemingly broke the top key level, which is, by the way, it's hard to see here, but it's 76.98, right? But when I saw that break, I knew that, this is a weekly setup. In order to filter out excess noise coming from the weekly, you need to go to the monthly close. This is how it works. If you work on a weekly, you need to filter out noise on the monthly. If you work on the daily, you will filter out noise going to the weekly, right? Here, the setup is coming from the weekly, so I went to the monthly and I wanted to see whether this was a genuine breakout or not. And here's what I found out. Take a look. You see this violation, seemingly violation we had above that 76.98? This is how it ended, right? Just 2 spikes. Price didn't really break above that level. It was just noise. So when I saw that, I knew that I have a beautiful situation here on the downside, and I started to take action. right? Now, I also noticed a secondary trading range that was starting to form. That's what we call a lower scale trading range that I was able to pinpoint by the blue system. And here's what I got in. Here's where I got into that position, because I usually need a second setup to fine tune my entries. I can't just rely on the big setup. It's just too crude. I have to have a second system that can help me fine tune the entry, that could help me to form a trigger. And this is what I'm looking for usually all the time. And here I found it. I had that lower scale trading range that was starting to form. We had the first leg, second leg, third leg. So at this point, I actually thought that we're going to have a fourth leg up, and my plan was to go all in once price reached the upper section here and starting to turn around for the fifth leg, basically. At that point, that was the plan, right? I thought we're gonna have the fourth leg, and only the fifth leg is the one to break out of the blue system, break out of the chains of the local price section, and go straight, to the big picture, to the major key level. Two of them actually, 72.47 and 67.42, which is, by the way, the official price target, right? 67.42 right here. I'm going to show you again the setup. It's actually it's pretty obvious. Here it is, 67.42. That's the lower section. That's the representer of the lower section. And we already had here 3-4 legs, so we expect the fifth all the way to the lower section again. In this case, like I've just told you about if you remember, about the dollar versus the Swiss and on the crude oil, because of the nature of the high, since it took the previous highs by a huge margin, I expected to do the same on the downside. So I may actually choose to adjust the price target, on the fly, basically, and push it to the previous lows. I may choose to do that. Right now, it's 67.42. This is the official price target right now. But like I said, there was a very important moment where I decided to establish this bearish position, and here's where it started. So price, instead of breaking above, I'm talking about breaking above the mid-low key level of the blue system right here, 75.454. This was supposed to be broken for price to generate the next upside leg, but it didn't, right? I mean, it touched base really nicely on the bottom key level to end the third leg, but then when it started to form the fourth, it failed to break, the main point of reference, which is always the mid-low key level. When I saw that spike, right, I'm talking about this spike right now. This is where I knew that it's time to take action. And I got in. I got in roughly at that point. And when price, very quickly, by the way, 2 days it took it to go almost reach the first price target, 72.47. Started to turn around a little bit. That was yesterday, right? But today, as you can see, boom, straight to the 72.47. And here, I actually had an automatic take profit order that closed most of the positions. So this is the reason I only have 10% right now, because I used that 72.47 to take most of the position out, right? I took a massive profit. I think the profit here is about 200 pip or so. I think maybe even more than that at the moment. Now, as you can see, price is drilling below 72.47 as we speak right now. But let me say this. I'm really not impressed by that. Let's just say that. Price can seemingly break out, right? But it could go back by the end of the day and leave just a little bit of a spike there. I actually expect that to happen. Okay, I expect that to happen. This is why I'm not going to go back in so quickly, right? I'm not going to go back to increase the position so quickly. Even if price is going to close today below 72.47, I'm probably not going to increase the position. That's because what I want to have here is a weekly close, right? I want to have a weekly bar here. I'm talking about obviously this week, right? It's going to end in a couple of days. I want to have a weekly close below 72.47. That would be huge. That would be very big indication that we're going to continue on the downside all the way to 67.42. So that's very big. It's a very important event that needs to happen. If price is going to close the day below 72.47 and continue on the downside before closing the weekly bar, I may choose to add one more trade, take it to 20%, but I'm pretty sure I'm not going to take it above 20% until I have that weekly confirmation. And only then I will try to drive that position all the way to 100%, right? 100% position size. So yeah, and we have about 450 pip still to go, right? I've showed you positions that were almost reaching their price target, almost about the end, right? Mostly, I mean, talking about the crude oil and the dollar Swiss franc. But here I'm actually showing you a position which is, I mean, it's doing very well, and it's done very well up until today in only 3 days. But the fact of the matter is there is still a lot of potential here on the downside. We've just made about 25% of the potential here. But I would advise those of you who don't hold this position to use that 72.47 as a trigger, right? Because we definitely want to have price showing, right, proving that it could break this particular support level, which is very prominent one. Alright, so you remember I told you about the two positions I'm going to close out, right? Probably. The Euro Swiss and the Canadian Swiss, I told you I'm going to replace them with new ones. So I have my watch list, and these are the two positions in my watch list right now. Let's take a look. So the first one is the Euro versus the Pound. We've been very much involved on the downside here before. So here's the big setup. Here's the big picture. Coming from the weekly chart, this is the system. Take a look. I'm going to do this quickly. We have the first leg going down, second going up, and from that point was supposed to start the fourth leg going downwards again, back to the lower section again. It started very well at the beginning, but then it entered this amazing, really amazing, very tight range, right? Sideways movement. I mean, take a look. It's going on for more than a year. This thing here, really obnoxious, really tight. I mean, really unique move, if you ask me. I haven't seen this type of moves anywhere else. I mean, for a year, for such a tight range, such a tough move to work with, you know what I mean? But I'm pretty sure it came to an end. I'm pretty sure we're looking at the very end of that obnoxious tight range, which means that price is going to set free. It's going to break out of that tight range. By the way, that tight range is very well represented by the black system here. So I'm thinking this is the very first move out of that system, black system, which eventually will reach the lower section right here on the big setup, right, the blue setup. So from that, you can draw some conclusion that I expect price to reach 85.35. 85.35, that's the main key level. And here's, let me throw in a few more technical elements that I think are very much supportive of my bearish conviction here. So first, let's talk about this particular move, daily chart. What's going on right now? What I'm looking at, I think, is a classic Elliott wave formation. This was the first wave. That was the corrective second wave. This is the third progressive wave, followed by the fourth corrective wave right here, right? And I expect price from this point to start and generate the fifth wave, sorry. That should go all the way Well, that pretty much fits the bigger picture. Should go all the way to 85.35. All right. So that's one element, right? Elliott wave. We just had the fourth corrective leg wave ending, and I think we're looking at a genuine downside reversal. But here's another interesting technical element. If you measure up, that fourth corrective wave against the third wave, which is the previous opposite move, right, from the very top to the very bottom, you'll find the 76.4, which is the most important corrective level, Fibonacci corrective level. It's also the last one. You'll find it, falling right here. Now take a look at the reaction we had on price with regards to that particular resistance level, in this case 76.4. Take a look at that spike here, right? That's pretty big. That's pretty big as an indication that it was a fourth corrective wave, and it was indeed, it is indeed ending, which means it's gonna open up the path for the next move, which is supposed to be the fifth progressive wave. So yeah, this is why I said this looks pretty promising on the downside. The only thing I want to have here is a breakout below 88.13 here. This is my official price target as of right now. And I also have a secondary trigger, which is the 280 moving average. But as you can see right now, yesterday price failed to break through that 280 moving average. Today it seems to be successful, although the day has just started. We have quite a lot to the end of the day. I have no idea how this one would end up, but right now it looks like it's breaking below the 200-day moving average. I only want it to break below 88.13, and then I will officially establish a bearish position aiming at 85.35. That's not a big move, but that's big enough. That's the minimum. That's usually the minimum range that I like to work with, about 300 pip. In the euro pound, 300. A pip worth more in the euro pound, right? So 300 pip is like 500 pip in any other 450 or 500 pip in any other pair. Okay, so this is the first one. The second one, also quite interesting, very interesting situation. New Zealand versus the Canadian, which, by the way, all right, that's quite a surprise, because when I was looking at this just about an hour ago, maybe 2 hours ago, it was below the neckline. All right, it was not breaking the head and shoulders pattern. This is just what it just makes me to get in right now, but I'm not going to do that yet. But it does look very good. So what you see here, obviously, you can see it right on the spot. We got an inverse head and shoulders pattern. Left shoulder, head, right shoulder. And I was using that neckline, right, for, to represent a breakout out of the head, out of that head and shoulders pattern. This is the inverse head and shoulders pattern, meaning reversing a downside trend. This is what the implications are. Price supposed to reverse full-fledged upside reversal and begin to build up the next upside trend. Now, when I say the next upside trend, I say it because you only see here the very small part of a huge, massive trading range that can be observed best from the monthly perspective. Take a look at that. This is the monthly chart, and you can see here this sideways movement. You can track it back all the way to 2013, believe it or not. This is a really massive trading range, and it's pretty wide. Every single leg is so big here, it could be considered as a major trend all by itself. You know what I mean? And here is the most interesting part of the technical picture. It's what happened last month. Price touched down on the bottom key level 83.70, spiked it, meaning it touched base, quickly bounced off, right? It's probably a strong support, and beginning to turn around. So we've made it all the way to the very edge of the trading range, right? Of the setup, symmetric setup, and price begins to turn around. Looks to me like we might have an upside leg all the way back to the upper section, starting with the level 94.05, which pretty much simply put suggests that we're going to have a move of about 1,000 pip, right? 1,000 pip. Now, the mid-low key level here should be an important secondary target at 88.58. That's much more realistic, much less ambitious, if you will. But the bottom line is that I've just established a bullish conviction on the New Zealand Canadian. All that's left to do is to pull the trigger and establish a bullish position. So these are the two candidates, right? The New Zealand Canadian on the upside, after looking on this beautiful head and shoulders pattern here, and the euro versus the pound. These are the two candidates that I think will replace two of my less profitable positions that I have right now. So yeah, this is the game plan for the upcoming month. We're talking about November. This is the 1st of November, first day of the trading month. Alright guys, that was pretty intense, I think. Forex portfolio overview, definitely my favorite session. I hope it's yours too. We'll see you next Tuesday with some more market, some top level market trading analytics. That's about that. Have a great trading day. Bye bye.